Hello viewers, in this video I'm going to discuss and explain one interesting fact. Who pays more income tax, whether the US resident or the Canadian resident? But before we proceed further, I would request you that you may like to subscribe our channel by clicking the bell icon for future updates. Here is the disclaimer, this video is only for educational purposes. However, if you need any specific advice on tax accounting matters, you may like to contact us at the numbers given below. For discussion purpose, I have divided this video into 4 segments or parts. In the first part, I'm going to explain the purpose of selecting the federal income tax rates. Then I'm going to explain some of the federal income tax rates that are applicable for year 2018 in Canada and the US. Then we'll make a comparison of different tax liabilities assumed by people living in US and Canada. And finally, we'll try to draw some plausible conclusions on the basis of this comparison. So the foremost question is, what is the purpose of selecting the federal income tax rates 2018? One obvious answer is that 2018 is the most recent year, and this may be of interest to majority of the audience. And the reason why we are focusing on the federal tax rates is just to keep the discussion simple. We can club or combine the provincial tax rates also, but it will just make the discussion more complicated for majority of the audience. So it is better we just focus on the federal tax rate, because ultimately the conclusions would be more or less identical. We go either way. So what are the federal tax rates for Canadian residents for year 2018? If you just look at this slide, you will notice that for year 2018, there are 5 categories or bands of income. The first category starts from $0 and extends up to $46,605 of taxable income, and the tax rate is 15%. In the second category, that extends up to $93,208, the marginal tax rate is 20.50%. And if you just look at this slide, gradually when you move forward towards high levels of income, the marginal tax rate is also increasing. For example, in the third band, it is 26%. In the fourth band, it is 29%. And in the fifth or the last band, which starts from an earning of 205,843 Canadian dollars or more, it is 33%. So this is basically the marginal taxation system, and this is the case with majority of the country, so long as the direct taxes are concerned. Now we look at the federal income tax rate for year 2018 in the US. If you look at this slide, you will notice that instead of 5 categories or bands, in US there are 7 categories of income. So there are 7 different marginal tax rates that may be applicable to residents of US. So apparently the US system appears to be more equitable and fair, for the simple reason that when you have more categories of income, it means the taxpayers have more choices to be adjusted in a specific band of income that is closest to what they are earning. Anyway, I'm going to explain this point later. So when you look at this slide, you will notice that the starting rate in the US is 10%, and this extends only up to an income of $9,525. And then in the second band, it is 12%, then it grows to 22%, then 24, 32, 35, while in the last band of income that starts from more than $500,000 of taxable income, it is 37%. Now we make a comparison of tax rates. Right now what I'm trying to explain to you is that in Canada there are only 5 bands of income, while in the US it's 7 bands of income. So what could be the possible implications so long as individual tax liability is concerned? So in this slide, I'm going to explain that difference. If you look at this slide, you will notice that there are, in the middle 2 columns, there are a few green shaded areas. For example, on the US side as well as on the Canadian side. So this green color indicates that who is paying lower tax or lower marginal income tax when compared with the counterpart living in the other country. For example, in the first 2 bands of income, that is in the first band, that extends up to $9,525. The Canadian individual or resident is paying 15% of tax, while the US resident is paying 10%. So it means it's a 5% additional tax that is paid by an individual who earns up to $9,525 living in Canada. In the second band, it's the difference is only 3%. If you just look at the last column, because the tax rate in Canada is 15% for this level of income or this band of income, while in the US it is 12%. Beyond this point, in the next three bands of income, it is the Canadian resident who is paying lower tax as compared to the US counterpart. And the difference is 7% less, 2% less, and 4% less if you just look at the last column. Beyond this point, again, starting from band of income level 7 and 8, it is again the Canadian citizen resident who is paying more tax, that is 26% and 29% when compared with the US counterpart, that is 24% in both the categories of income. So difference is 2% and 5%. Beyond this point, it is the US resident who has to pay more marginal tax as compared to the Canadian resident. So if you just look at these statistics, the point that we have to highlight is that there's no one right answer if somebody asks you that who pays more income tax, whether it's the US resident or the Canadian resident. Well, it all depends upon the taxable income of the individual and whether that taxable income falls into a band where the tax rate is lower in the country of that individual and or not. Anyway, I'm going to explain this point further in the next few illustrations. So in these illustrations, what I've done is I've divided different groups of people into three broad categories. Those who are earning low income, that is lower income group people, then middle income group people, and finally the upper income group people. So if you look at this slide, we assume that anyone who is earning from $10,000 to $50,000, whether living in the US or Canada, they may be categorized as lower income group people. So if you look at, for example, some of these statistics, anyone who is earning $10,000, they have to pay federal tax of $1,000 in the US, while only $1,500 in Canada. So it means the Canadian is going to pay additional tax of $491, and this comes to approximately 49% if you look at the last column under the heading difference. Calculations, detailed calculations are not shown, but just for simplicity, you need to focus on these figures. But the interesting point is, as we move forward towards higher income level within this range of income, you will notice that initially the difference is 49%. Then those who are earning $20,000, the difference is 36%. Those who are earning $30,000 in either of the country, the Canadian is paying 32% additional tax, while those who are earning $40,000, it's 27% additional tax paid by the Canadian resident, and for those who are earning $50,000, it's 11% additional tax. So the important conclusion that we can draw from this analysis or these statistics is that so long as lower income group people are concerned, they have to pay higher tax in Canada when compared with, for example, their US counterparts. But gradually when they move towards a higher income level, this difference keeps on declining. Now, in this slide, we look at the middle income group people, and for analysis purpose, we assume that middle income would imply anyone who is earning from $100,000 up to $300,000. If you just look at the tax liability of US resident and the Canadian resident, you will notice that anyone who is earning $100,000 in either of the country, they are paying more or less the same tax because the difference is only 0% if you look at the last column. Similarly, anyone who is earning $150,000, it's the Canadian who has to pay more tax, and the difference is $1,186 or 4%. And interestingly, when you look at third category, that is, or third band, that is $200,000, more or less the tax liability is the same in both the countries. But beyond this point, what is happening is that, for example, anyone who is earning $250,000, if they are living in Canada, they have to pay 67% additional tax when compared with their US counterpart. Anyone who is earning $300,000, they have to pay 52% additional tax when compared with their US counterparts. So the interesting point that you might have noticed in this slide is that anyone who is earning $100,000 and $200,000, they're paying more or less the same level of tax whether they live in Canada or the US. Now, we look at the higher income level of group of people, anyone who is earning from $500,000 to $1 million. In this case, if you look at this slide, anyone who is earning $500,000 of annual income, the Canadian counterpart is paying additional tax of $37,612. It is approximately 25% additional tax. But gradually, as we move forward towards higher income level, for example, at $600,000, the difference is only 18% additional tax paid by the Canadian counterpart. At $700,000, it's only 13%. At $800,000, it's 10%. At $900,000, it's 7%. And at $1 million, the difference declines to 5%. So the conclusion that we can draw from this slide is that initially the Canadian counterparts are paying more tax within this upper income level group of people, but gradually as the income rises from $500,000 to higher income levels, the difference is reducing gradually. So what conclusions we can draw from this analysis? The first conclusion is, for reinforcement purposes, I'm going to reiterate some of the points that I've already explained earlier. The first difference is that different tax rate slabs are prevalent in both the countries. The US system has more tax slabs, so that appears to be more equitable. The personal income tax liability at the same level of income is different in two countries, and this is due to different tax rates, as we demonstrated earlier. Now, another important conclusion is that at lower income level, that is ranging from $10,000 to $50,000, the poorer Canadians pay more personal income tax than their US counterparts. This may be questionable for some people, but they may not overlook the fact that the social security network in Canada is much more stronger when compared with the US. For example, the health insurance system. So to some extent, people who fall within the lower income group or even in the middle income group, they are compensated by the government within the network of social security system that is prevalent in Canada. Anyway, and middle income group that ranges from $100,000 to $300,000, the Canadians initially pay less personal income tax than the US resident, but then the gap widens. At the higher income group between $500,000 to $1 million, Canadians initially pay more tax, but then the gap is narrowed down. The point that I explained earlier, that precisely at $100,000 and $200,000 income levels, the tax liability of both the residents, whether they are US resident or the Canadian resident, is the same. Well, from a holistic perspective, because we know that majority of the people fall in the lower income group or middle income group, the conclusion that we can draw from these statistics is that in a nutshell, average Canadians pay more personal income tax than the US residents due to higher marginal tax rates and fewer tax slabs in Canada. I hope you enjoyed this video. If you need any specific advice on tax accounting and business matters, you may like to send us an email at pascat2017@gmail.com, or else you may call us at 289-952-3494, or you may like to visit our website at www.pascat.com. Thank you for watching.